All right. So we've got a pretty hefty stack of UK government documents here, all about these furnished holiday let tax changes. And big shifts are coming in April 2025.
Right.
So we're going to break down exactly what you need to know, whether you're, a seasoned FHL owner or just kind of starting out in the UK property market.
Yeah, these changes are they're pretty significant, really.
Okay.
It's essentially the end of the road for this sort of specialized tax regime that furnished holiday lets have enjoyed for so long.
Right.
So from April 2025 onwards, any income or gains from your FHL will be treated the same way as income and gains from any other type of property business.
So no more special treatment for FHL.
Not at all.
That's going to be a major adjustment, I imagine.
I think so.
For a lot of people. I'm curious, what's the government's reasoning behind this?
That's a good question.
Is it just about simplifying the tax system, or?
Well, the government's primary argument is fairness
Yes.
and creating a level playing field
Right.
across the entire property market. So they're saying that the lines between FHLs and other rental properties have become a bit blurred over time, and that separate tax regime is no longer justified.
Okay.
There's also the argument that aligning FHL taxation with standard property business rules could potentially encourage more investment in long-term rentals, which could help address the UK's housing shortage.
Interesting.
So, there's a few factors at play there.
That makes sense.
Yeah.
But for FHL owners who've been operating under this specific tax regime for years, this is going to have
It's going to have a real impact.
a real impact on their bottom line.
Yeah, for sure.
Can you walk us through the key areas where FHLs used to have a tax advantage
Absolutely.
and how those are changing?
So let's break it down into 4 key areas.
Yeah.
Finance cost restriction rules, capital allowances, capital gains tax reliefs, and pension relief calculations.
Gotcha.
So starting with finance cost restriction rules.
Yeah.
Currently, FHL owners can deduct all of their mortgage interest from their rental income when figuring out their profits. But come April 2025, these loan interest deductions will be limited just like they are for other landlords.
Okay, so help me understand the implications of this change.
Sure.
Like, how might this actually affect someone's finances?
So let's say you have a mortgage on your FHL property.
Okay.
Under the current rules, you could deduct all of the interest you pay on that mortgage from your rental income, reducing your taxable profit.
Yeah.
But with this change, you'll only be able to deduct a portion of that interest.
Okay.
And this could mean a higher tax bill for some FHL owners.
Yeah, that's a considerable change, especially for those who've, structured their investments around the existing rules.
Yeah.
What about capital allowances? I know that's another area where FHLs have traditionally had an advantage.
Right. Currently, FHL owners can claim capital allowances for items, like furniture, fixtures, and equipment in their properties. It's a way to offset the cost of these items against their taxable income.
Okay.
But after April 2025, this will change significantly.
Okay.
Instead of these fairly generous capital allowances, FHL owners will only be able to claim a much more limited replacement of domestic items relief.
Can you give us a concrete example to illustrate this?
Let's say you buy a brand new top-of-the-line sofa for your FHL for £1,000 under the current rules. You could claim a significant portion of that £1,000 as a capital allowance, reducing your taxable income. But with this new replacement of domestic items relief, you'll only be able to claim relief if you're replacing an existing sofa. And there are strict rules around what qualifies as a replacement.
Gotcha.
So if you're outfitting a new property or just upgrading your furnishings, this change could have a noticeable impact.
That definitely clarifies things.
Hopefully.
So we've covered finance cost restrictions and capital allowances.
Right.
What's the third area?
The third area is capital gains tax release.
Okay.
So FHLs were previously eligible for a number of these reliefs, such as business asset rollover relief, which could allow you to...
What's the fourth and final area?
The fourth area is pension relief calculations.
Okay.
So currently, income from FHLs is considered relevant UK earnings for pension purposes. This can have implications for how much tax relief you can claim on your pension contributions.
Right.
But after April 2025, this will no longer be the case.
Right.
FHL income will be treated like other rental income.
Gotcha.
For pension purposes.
This is all crucial information.
Yeah, it's a lot to take in.
For anyone currently operating an FHL or even thinking about getting into the FHL market.
Yeah.
But before we delve into the specific implications for those groups, I think it's important to step back and consider the bigger picture.
Yeah.
We've outlined what's changing.
Right.
But why is this happening now? That's driving these changes.
Yeah.
So we've been kind of dissecting these upcoming changes to FHL taxation.
Yeah.
And it's clear that they're going to, shake things up for a lot of people. Yeah. But I think it's important to kind of zoom out a little bit and consider the broader context here.
Sure.
What led to this point? Why is the government implementing these changes now?
That's a great question.
Yeah.
To understand that, we need to kind of consider how the UK holiday rental market has evolved over the past few decades. So back in 1984, when the FHL tax regime was first introduced, it was a relatively niche market. But in recent years, thanks in part to platforms like Airbnb, the market has exploded. So this has led to some debate about whether the original justification for the special tax treatment still holds true.
So the rise of platforms like Airbnb and the sheer growth of the short-term rental markets have played a role in prompting these changes.
Yeah, definitely.
It sounds like the government is trying to adapt to a new reality.
Precisely. And it's not just about the growth of the market.
Right.
It's also about the changing nature of FHLs themselves. The lines have blurred between what constitutes a traditional FHL and other types of property rentals. So you have properties being used for a mix of short-term holiday lets and longer-term lets.
Right.
And the existing tax rules don't always reflect this kind of hybrid model.
So the government is aiming for a more streamlined, and in their view, a fairer system that reflects the current market landscape.
Exactly.
But these changes are bound to have, significant repercussions
for sure
across the UK holiday rental market.
Right.
What are some of the potential impacts?
Well, one of the biggest concerns is the potential for an increased tax burden on FHL owners, as we've discussed.
Right.
This could lead to some owners deciding to sell their properties or convert them to long-term rentals, potentially reducing the supply. FHLs available in the market.
And if the supply of FHLs dwindles, while demand from holidaymakers remains strong or even increases, that could have a knock-on effect on prices.
Exactly.
We could see rental rates for FHL properties climbing,
for sure,
making UK holidays more expensive.
Yeah, and it's not just about price. If fewer FHL properties are available, it could limit choice for holidaymakers. Especially in popular tourist destinations. And this could potentially impact the overall tourism industry in certain areas.
So there's a real possibility of a ripple effect.
A domino
across the market, affecting both property owners and holidaymakers.
Absolutely.
While the government's goal might be to create a fairer system, it's important to acknowledge these potential downsides.
It's all about balance, right? Weighing up the pros and cons.
Are there any potential upsides?
Oh, there could be.
To these changes.
For example, if some FHL owners decide to sell their properties, it could open up opportunities for new investors to enter the market.
Interesting.
This could bring fresh capital and potentially lead to a wider variety of properties available for rent.
That's a good point.
It
could also stimulate competition exactly in the market, which could be beneficial for holidaymakers.
Competition is usually good.
In the long run.
Yeah, it drives innovation and better service.
And as we mentioned earlier, the government is also hoping that these changes will encourage greater investment in the long-term rental market.
Right.
So if some properties are shifted from short-term holiday lets to longer-term rentals, it could potentially ease pressure on the rental market and contribute to addressing the UK's housing shortage.
That's the hope anyway.
So there are potential benefits to consider alongside the potential drawbacks. It's going to be fascinating to see how the market adapts and evolves. in response to these changes. But before we get too carried away with speculation, let's bring it back to the practical implications for our listener. We've touched on national insurance contributions and how they tie into these changes, but I think it deserves a deeper dive.
Okay, let's do it.
Can you walk us through the key points?
Absolutely. National insurance contributions are a crucial aspect of the financial picture for landlords.
Right.
And these FHL tax changes have implications for how these contributions are calculated.
Okay, let's break it down.
Okay.
You mentioned there are different classes of national insurance contributions. Can you clarify what those are and how they apply to landlords?
So the two main classes that are relevant for landlords are Class 2 and Class 4. Class 2 contributions are a fixed weekly amount. And they count towards your eligibility for certain benefits, including the state pension.
Right.
So think of it as a regular payment that ensures you're covered for these benefits in the future.
So it's like a safety net.
Yeah, a safety net.
For landlords, ensuring they're contributing towards their future benefits.
Exactly.
What about Class 4 contributions?
Okay, so Class 4 contributions are a bit different. They're calculated as a percentage of your profits and are paid through your self-assessment tax return. So the more profit you make from your rental property business, the higher your Class 4 contributions will be.
It sounds like Class 4 contributions are more like a tax on your rental income.
Yeah, that's a good way to put it.
While Class 2 contributions are more like a fixed Social Security payment?
Yeah, a regular contribution.
Now, here's where it gets interesting. In relation to the FHL tax changes, currently, if your FHL business is your primary source of income and you meet certain conditions, you're considered gainfully employed for national insurance purposes. This means you're required to pay those Class 2 contributions, ensuring you're contributing towards your state pension and other benefits. But how will these Class 2 contributions be handled after the FHL tax regime is abolished? Will FHL owners still be required?
That's a good question. And that's where things get a little uncertain.
To make these payments.
The government has indicated that they may review the rules around Class 2 contributions for former FHL owners once these changes take effect. It's possible that former FHL owners will no longer be required to pay Class 2 contributions if their property income is treated like any other rental income.
Gotcha.
However, the specific details are still being worked out. So it's something for FHL owners to keep a close eye on.
So there's a bit of a waiting game.
Yeah, a bit of a wait-and-see approach.
When it comes to Class 2 contributions. But what about Class 4 contributions?
Okay, so Class 4 contributions, as we discussed, are based on your profits. And as we've seen, the abolition of the FHL tax regime could potentially result in higher taxable profits for some FHL owners, particularly due to the changes to loan interest deductions and capital allowances.
Right. So if your taxable profits go up as a result of these changes, your Class 4 national insurance contributions?
They'll likely increase as well.
That's another important financial consideration for FHL owners to factor in.
Absolutely crucial.
And it highlights the interconnected nature of these changes.
Like everything's connected.
Understanding the implications for national insurance contributions is crucial for anyone involved in the FHL market.
Yeah, if you're in the FHL game, you need to know this stuff.
Absolutely. We've covered a lot of ground in this deep dive, from the specific changes to the FHL tax regime to the potential impacts on the market and the intricacies of national insurance contributions.
All the nitty-gritty details.
That's a lot to take in.
It is.
But hopefully our listeners are feeling more informed.
Fingers crossed.
And prepared for what lies ahead.
Absolutely.
But before we wrap things up, I'm curious to hear your thoughts on a broader question. So with all these changes coming down the pipeline, how do you see the UK furnished holiday let market evolving? What kind of future are we looking at?
Well, that's a big question. And it's tough to say for sure, but based on what we know, I think we could see some pretty big shifts.
Like what kind of shifts are you thinking about?
Well, for one thing, we might see changes in the types of properties that are being offered as FHLs with the potential for a higher tax burden.
Right.
Some owners might find it more financially viable to focus on higher-end properties, the ones that can command those premium rental rates.
Right. So a potential move up market for some FHL owners.
Yeah, exactly.
That makes sense. What other shifts might we see?
I think we could also see changes in pricing strategies.
Okay.
As we've talked about, the potential for reduced supply.
Yeah.
And increased costs for owners that could really put upward pressure on rental rates. And this could lead to, I think, more dynamic pricing models.
Okay.
With owners adjusting their rates more frequently based on demand, seasonality, competition.
Right, almost like what we're seeing in the hotel industry.
Exactly.
Yeah.
No revenue management tools and
interesting.
And those sorts of techniques.
So it could become a much more dynamic market with pricing.
Yeah.
Fluctuating more frequently. Are there any other
I think
potential shifts?
We could see the emergence of new business models in the FHL space.
Interesting.
For example, we might see more partnerships between FHL owners and property management companies.
Okay.
As owners seek to outsource those increasingly complex tasks of managing their properties and navigating,
all these new regulations.
These tax regulations.
It could lead to almost like a professionalization.
Yeah, I think so.
Of the FHL sector.
Yeah, more emphasis on quality and service.
Yeah.
As competition heats up.
We might even see the rise of niche FHL offerings.
Absolutely.
Catering to very specific segments of the market.
Like pet-friendly properties, family-friendly properties.
Yeah.
Properties specifically designed for remote workers.
Okay.
As the market gets more competitive, owners will need to differentiate themselves.
Right.
And really appeal to those specific target audiences.
So a more segmented and specialized market.
Yeah, for sure.
These are all really thought-provoking possibilities.
Yeah. It's going to be interesting to see.
It's going to be fascinating to see which trends take hold and how the market adapts to all these changes.
Yeah.
But I want to emphasize one key takeaway.
Yes. Go ahead.
For our listeners, before we wrap up. Knowledge is power.
Absolutely.
Especially when it comes to navigating complex financial matters.
That's true.
We've covered a lot of ground in this deep dive, but it's really just the starting point.
It is.
It's crucial for FHL owners and prospective investors to stay informed, to do their research, and to seek professional advice when needed.
Yeah, if you're unsure about anything.
The HMRC website.
Oh, yeah, that's a great resource.
It's a fantastic resource with detailed guidance documents.
Tons of information on there.
On all these tax changes. We'll be sure to include links to those resources.
Yeah, we'll put those in the show notes.
In the show notes for this episode.
For sure.
And don't hesitate to consult with a qualified financial advisor to discuss your specific circumstances and develop a tailored strategy. With the right knowledge and guidance, you can navigate these changes successfully.
Absolutely.
And position yourself for success in this evolving FHL market.
Definitely.
Well, on that note, I think we've reached the end of our deep dive into the UK's furnished holiday tax changes. Thank you for joining us.
Thanks for having me.
On this journey of exploration and discovery.
It's been great.
We hope you found it informative and insightful.
Yeah, hopefully it's been helpful.
Until next time, keep learning, keep exploring, and keep diving deep.